All right. Good afternoon. We are due to have a Bank of England announcement shortly on interest rates. Are we going to see the interest rate hold at 5.25%, or are we going to see the interest rate fall? The consensus from a lot of the news outlets and from what I've been hearing is that we're expecting that interest rates are going to hold at 5.25%. And if I'm honest, I don't see that they'll do anything different, but I could be wrong. Now, overnight yesterday, the Fed over in the US, which is the American equivalent to the Bank of England, held interest rates over there. And if you've been following this saga right from the beginning, you will appreciate that the Bank of England has almost been in lockstep with the Fed, mirroring its movement. So people are positing, well, the Fed held interest rates yesterday. We're likely going to do exactly the same today as well. So that announcement is going to be coming out in about 14 minutes time. I'm going to run through what that basically means. We'll talk a little bit about savings rates. Because I think that's going to be one of the big concerns for people who may be tuning into this, who want to know a little bit more. If the bank rate does reduce, what does that do for savings rates? Yes, it's going to be good for mortgage. Well, it won't be good for people. Well, it will be good for people who have mortgages because interest rates on mortgages will likely come down. And we've already started to see that yesterday, some of the providers have already brought some of their mortgage rates down, but it doesn't mean good news for savers. And I think it's just worthwhile just noting that for savers specifically, this is the first time that we have now got into the territory where we're seeing savings rates that actually beat inflation. And in order to kind of like just demonstrate this, I want to just share with you a very quick screen. So let's have a look at Raisin because you'll be surprised at the moment at the type of savings accounts that are available and the rates that are also available at the moment on the high street. Let me just change this over into this view right here. So Raisin, what they basically do is they're kind of like a supermarket for savings accounts, right? And if you look at their easy access accounts right now, they've got one at 4.75 here. This one's changing to 4.72 on the 25th, which is in 4 days' time. This is 4.75, 4.72. These are all easy access, so instant access accounts. If you go on to some of their notice accounts, which means you need to give 95 days notice in this example right here, this is currently at 5.4, reducing to 5.2 on the 25th, so in 3 days' time. I think this one has already changed to 5 point, it's changing on the 18th of April to 5.3. You also have this one here, 5.1, reducing to 4.8. Now, the point is that at the moment, whilst interest rates are at 5.25, there are a lot of very attractive interest rates that are available right now. This is a fixed term. So this is a 1 year fix at just over 5%, 5.05, 5.02 for 1 year. They've got a six, actually, this is really good. They've got a 6 month one at 5.01%. So if you're a saver and you're trying to figure out what it is that you actually do, can you lock in a decent deal for your savings? This would be a good time to try and do that because the consensus is that we may not see the Bank of England base rate get cut today, but it is likely we're going to start to see cuts, I would imagine, by I would say the end of quarter 2, beginning of Q3, which gives us really April, May, June, or gives you at least April, May, June to be able to lock in some kind of interest rate on a savings account that is decent enough to beat the current rate of inflation. Now, it was good news, obviously, this week that inflation has dropped to 3.4%, which is a little bit more than what they had expected it was going to drop to. If I just show you the forecast that they're working with at the moment, it's very, very interesting to see. Let me just bring this screen up very quickly for you so you can see this. So these are the forecasts, and the one that we're really interested in for the UK right now is inflation rate, which is this one right here. So currently, at this point in time, we're at 3.4%. What they're saying in Q2. So I would imagine they're putting this to the end of Q2, 2%, which means we will hit our inflation target of 2% in Q2 or the end of Q2 2024. But look at what they're forecasting for Q3 and Q1. They're forecasting that inflation will be below the 2% target that they basically set. So I don't know whether this is optimistic. Could be. I've always had to look at these forecasts with a relative degree of like skepticism because they get this wrong a lot. They get this wrong a lot of the time. But this is based on the data that they're seeing right now and what they expect to happen. The track record hasn't been great. But I would imagine that it is going to be good news if they're able to get to this level in Q3, Q4 this year. I mean, the reality of the conversation is this, that ultimately, whilst yes, inflation has gone from 4 to 3.4% this week, prices are still increasing at a higher rate than they were last year. And so for ordinary people, this isn't going to feel like anything's really getting better. And I spoke about this a little bit yesterday on Instagram. The fact that if you're doing your food shop, and one of the reasons why inflation fell this week was because of food shop, that 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 cost has come down slightly. But for everyday people, it probably doesn't feel like that when you're doing your weekly shop. Energy prices are going to come down, although the cap has recently just gone up. My energy price, when I got a notification that it was going to go up, then I've got a notification that it's now coming down. I don't think it's come down as much as what they said it was going to go up by, though. So for a lot of people, the squeeze is still going to exist on energy, still going to exist on food, still going to exist on fuel. There's a squeeze, generally speaking. So this is good news that we're at 3.4%. However, it probably doesn't feel like that. And the next, I guess, domino really is the fact that we need to get the Bank of England base rate to a place where we can start to see interest rates start to drop for things like mortgages and so on and so forth. I think we will have something out in a moment, but let me just bring up and share this screen with you just to see what Sky are reporting on this right now. I think we've still got about 7 minutes or so before the announcement. I'm going to try and see if I can get hold of the record of the votes. As you know, the Monetary Policy Committee, there are 9 people on that team. And so the majority effectively wins. But it'll be interesting to see how they vote. How many of them think that it's worthwhile holding? How many of them are pushing for a rate cut? There is an argument at the moment that we need to see a rate cut so that it is a catalyst to stimulate the economy. We're in a bit of a shadow recession right now, or technical recession as they call it. Many are arguing that if you can decrease the Bank of England base rate, make lending a little bit more affordable, that is likely going to have a positive impact on business and the economy, because people will then be able to borrow more money but at a lower rate, and that stimulates the system. So there is that argument. The counter argument to that is we've only just got to 3.4%. We've entered the threes for the first time in what feels like 2 years now. And so if you cut the bank rate right now, there is a huge fear that it may be a little premature. And so the argument is for them to hold until we at least get to the 2% mark and then start to cut. But that's anyone's guess in terms of what they're going to do today. The 9 members of the Monetary Policy Committee, they're all pretty much economists. They all pretty much, very educated, and they understand how these things work so much better than I. And so I would like to think, and this is where we put in faith in our system, I would like to think that they know exactly what they need to do, or at least they have some kind of idea of what they need to do. And that may be wishful thinking. And I'm sure many of you people will agree that that isn't necessarily an overreach by any stretch of the imagination. So I guess we're going to have to see what happens in about 5 minutes' time. I'm just monitoring the Sky News feed right now. They haven't really bought anything up. By the way, if you are watching this and you do want to check out Raising UK, said they're a supermarket for the best savings rates available. I put a link in the comments for you to go and use them. I've kind of teamed up with them as a bit of a sponsorship on the channel. I'm going to be doing a bit of a video for them in a few weeks' time. So just for full disclosure, if you do use them, I'm going to receive a bit of a commission for you if you do open an account with them as well. But they're one of the good places that you can actually go and have a look at. Obviously, there are others. You don't have to use them. but they're the ones that I've had a chat with, and I like what they basically do. And they do have those three categories where you can have get notice accounts, easy access accounts, and also fixed accounts as well for a period of time. All right, let's have a look at Sky and see what they're saying. Are they? They're covering some news about Hostel World right now, so maybe we'll just carry on for the time being here. The other thing that I wanted to kind of like show you is, actually, let me just share this with you actually, because on the forecasts that we were looking at a little bit earlier on, we can actually see that when it comes to the interest rate forecast, and again, this kind of leads into the logic behind the fact that we won't see interest rate cuts today. If you look at the forecast for interest rates, let's go back, which is this line right here, we're not factoring seeing an interest rate cut until Q3. And I think it's going to be the beginning of Q3. I think if we do get that pulled forward, it's likely to be the end of Q2. But they're factoring in a reduction. That's a 0.5% reduction, by the way. Yep, 0.5% reduction. They're factoring that in to begin at Q3 2024. So I think there's still a little bit of a way to go before we start to see this happen. Someone asked me yesterday, what do I think the impact of this will be on the housing market in terms of for mortgages? And I don't personally think that there'll be any real kind of impact on renters specifically if you have been, I wouldn't say a victim, but you've had to see an increase in your rent payment because of interest rates going up. Because when you really think about it, if your landlord has put up rent because their mortgage has gone up, they might have gone from a 2% mortgage to a 4 or 5% mortgage, and they've increased your rent by a certain amount to compensate for that. Even if we do see rates drop right now, if your landlord's gone into a fixed rate, they're locked in to that increased costs. So it's not going to impact the rental space that much. Will it impact the mortgage market in terms of property prices? Potentially. But what I think will probably happen is if we do start to see interest rate cuts in August this year, it is very, very likely that what will happen is we'll start to see a bit of a resurgence in the house prices later on in the year. So I guess it's just watch this space, really, is going to be the key thing. But let's jump over, because I don't want to miss this when they announce this. Let's jump straight over and see what they are saying over at Sky. Now, what are we doing here? Make sure what are we doing? We're going this one right here. All right, okay. Let's have a look and see what they're saying here. Let's get this on. Let me know if you can hear this as well, guys. Just to make sure, I'm sure that I've done this in the right way, but I've not done a stream for a while, so I'm a little rusty. They normally publish the voting record for the Monetary Policy Committee meeting on the Bank of England website. So I'm just having a look to see if that's been uploaded now, bearing in mind we're now at noon. So we should, here in the next few minutes, will be published shortly after that.
A very good afternoon to you. It is midday. In just a
They're
moment,
updating
Bank of
right now.
England will announce its latest decision on interest rates, as you can see here with me on SEDAR Data and Economics editor Ed Conway. Ed, the rate is currently 5.25%. What's the expectation?
They've held it. I can tell you, it's just come through. They've left it on hold. This is totally in line with expectations. No one was expecting a change today. So 5.25% is where it stays. We're going to see, I guess, in a moment, which members of the committee, because what you have is you have 9 members of the Monetary Policy Committee. They vote on this decision. The interesting thing last time around, Wolf, was that there was a 3-way split. So one of the members, Swati Dhingra, voted for a cut. That was a big moment because it was the first time any of the members had voted for a cut. Then you had 2 members voting for increase, and then the rest of the committee voting to leave things on hold. So the question this time around, and we're going to see this kind of coming through in just a moment. Actually, look, I can tell you, it was an 8-1 majority to leave interest rates on hold.
Interesting.
And that one member preferred to reduce interest rates by 0.25%. So the 2 members who were previously voting for a rise in interest rates are no longer voting for that rise. So that's, in this kind of Kremlinology of looking at all of these decisions, looking at the statements, looking at what they're saying, looking at the votes and trying to get a sense of where they're heading. That is quite significant because you had 2 people who were pushing up. They're no longer pushing up. And actually, quite a few economists thought that the split might have stayed the same this time around. So in the scheme of things, that is what economists would call dovish. It suggests that they're kind of looking towards downwards rather than upwards.
And interestingly, they've done that while the inflation rate that we got earlier this week, which has continued to fall, was still quite a long way above the Bank of England's inflation target. They were seen as hawks that like to keep rates high. Even though the inflation rate's 3.4%, the target's 2%, they've already removed that sort of impetus to put rates further higher.
Yeah, they have. And so we had the inflation number yesterday. It was 3.4% rather than 3.5%, still above, as you say, the Bank of England's target, which is 2%. But even the bank itself thinks that those inflation numbers are going to come down. It's going to get towards 2% quite soon. But what's going to be interesting is just seeing, first of all, what kind of hints we get from the bank about when they are likely to cut. That's the question. The question right now is not, whether it's going to be up or down. The question is, when are they going to cut? And if you look at interest, actually, we can show you a chart of the rates as they've gone recently. If you look at where they are right now, 5.25%, a lot of economists think maybe it's going to be, outside chance of May, which is obviously the next meeting, but probably more likely to be August. But what's interesting here is looking around the world. So that, by the way, is the kind of
There's a meeting in June as well.
There's a meeting in June as well, but typically they tend to do the big things, the big moves, when it's an inflation report. Not inflation report. It's called monetary policy report. When they do their forecasts, basically. So that happens in May. It happens in August. If you want to look back, actually, we've got another chart just kind of going back a bit further, just so you can see the kind of historic story here. The rates there with 5.25%, yes, they are lower than they were in the late 1990s, but as anyone who's got a mortgage and has refixed recently will tell you, it is still a very big shock. And actually, particularly because people have slightly higher levels of debt right now, those people who have mortgages are struggling as a result of this. And so the longer those numbers stay high, the longer it takes for the bank to go down. There are many people who think, that in itself could propagate a recession.
So talk me through about how the 9 people vote, because 8-1, 8 today voted to keep them on hold, 1 for a cut. The prior 2 who had said that they wanted a hike have obviously now said hold. If we're only moving at that slow pace of people changing how they vote, it's quite a long way until 5 at least vote for a cut. But they do kind of vote in batches. 3 or 4 of them often vote together.
Yeah, and you kind of what's interesting is that you often have a big shift when the bank does its new set of forecasts. And that will be kind of quite a big moment. So the next one is coming up in May. They do it every 3 months. They look at the state of the economy. And that just tends to be the time that they also tend to move interest rates. And, they can provide some context to it. There's a bit of background to it. Also, their minds slightly change because they're like, oh, this is what the model is saying right now. And also, we've had the budget, of course, and the budget is something that's kind of potentially pumping a bit of stimulus into the economy. So, but the main story here is, I don't think anyone would be surprised about the fact that interest rates have stayed on hold. What's probably more interesting is that those 2 members, Catherine Mann and Jonathan Haskell, who were previously voting to increase rates, they're not doing that anymore. Last time around, the Bank of England governor said, the next move is going to be down. The question is kind of when. We are still none the wiser as to that when moment is coming.
But the drum beat's got a tiny bit louder.
It's got a little bit louder, and I think whether it's May or whether it's August, it's coming, pretty soon. And that's the only question now.
Interesting you say May and August, because the market expectation before today was that it would actually come in June. It's a sort of probability-based thing, not a binary. This is what we're saying it'll be at this meeting. Let's talk about the market a little bit. Ed's going to stay with us. Ian King's also able to join us.
All right, let me just, I'm going to
Ian,
jump in
little
here. I'm
bit of
just
a
having a
slip
look
there
in the
in
background
cable
at
and
the
British pound against the US dollar off the back of this
voting
change in vote.
record.
Yeah, that's right.
For,
Sterling was
let me
around
just
a
get
third
rid
of
of this. 1
1% lower
second.
against the dollar going into this announcement. It's now off.
Let's get rid of that. I've just been looking at the voting record in the background to see how they've voted. Like they've been saying it's 8-1. And Jonathan Haskell, yes. So who voted? Only one person, Swati Dindra, is the only one that voted for a reduction to 5%. So as it currently stands, how this works is it is pretty much by majority. The majority effectively wins. So 8 people saying that we need to keep it level. What I might do is I might link to the page on the Bank of England website. You can download the report and have a look at it if you so wish. But I think ultimately, this is where we are. This is expected. This is what we were expecting. Will we see the lenders continue with reducing mortgage rates as they have done over the past couple of days? We've seen mortgage rates kind of like seesaw. We had a period where they went down, then they went up, and we've seen them come down a little bit over the past couple of days. And I think the main reason for that is obviously the banks, they use swap rates, and the swap rates are based on the Bank of England base rate. There's an interaction there. And for a lot of the mortgage lenders, it's them trying to figure out how much can I borrow money for on the long term so that I can price it right today. And what I think we've been seeing over the past maybe month and a half, where we've seen mortgage rates go up and go down from the lenders, is they're just trying to effectively get more business to stimulate people, buying properties and taking out mortgages. But I feel like it's going to be August by the time we actually get round to really having a concrete insight into what's going to happen with interest rates and therefore mortgage rates a little bit later on. I always try and cover this when we talk about this on the channel. If you're a first time buyer right now, the best thing for you to do is keep your ear to the ground. Keep your ear to the ground and just, make sure that you're paying attention to your local market. You've got to think about interest rates and house prices as a two-way thing. They come in a package. The mortgage rate will impact how much you're paying, but the house price is still going to impact how much you're paying. So the question is, what is utopia for you? Where is that middle ground where things might still work, even though we're in a bit of a high interest rate environment? And the reality is, again, I've said this all the way through last year. I'm going to say it again now. We're not going to get to the point where interest rates are going to go back to 1, 2, or 2%. That's not going to happen. I think they'll probably level out at maybe 4 or 5. That's where we're going to see them, and that would still be historic low, although not as low as what we've had previously. So I think, look, that's it for the time being. I want to do this really, really quickly. Right now, there will be the podcast. The podcast is reformatted, by the way. The podcast is now new and kind of improved. We're taking questions from listeners. This week, we're talking about squiggly careers, the fact that, unfortunately, a job for life, that idea no longer exists. And so what that means is that in a career, oftentimes people take upward steps, sideways steps. They might go backwards to move forward. It's more of a squiggle than it is a straight line. I've got Sarah Ellis. She's amazing. She's the co-founder of Amazing If. They did a TED Talk, which has got 2 million views. They have a podcast with 4 million views. They are very, 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 very well renowned in the career space. And we're talking about squiggly careers, what it means to have a career that may be different from what you may have expected in 2024 and beyond. So very, very worthwhile watching. That is now live on the channel. So go give that a watch if you can. But I appreciate you for dialing into this. Is there something else I'm supposed to mention? I feel like there is. I feel like I'm forgetting something. Am I forgetting something? I probably am forgetting something. I'll probably remember a bit later on. But yeah, go check out the video. Video on Tuesday was about investment plans. How do you create one in 2024 with a bit of volatility? How do you make sure that you're not subjecting yourself to concentration risk when you're investing? Very, very interesting topic. Very, very interesting kind of like take in there as well. But I appreciate you. Enjoy the rest of your afternoon. If you do have any questions, if you do want to submit questions for the podcast, then all you need to do is either message me in my DMs on Instagram, and I'll put you in a queue. If I have an expert that is relevant to that question, if it's something that isn't about money, finance, or investing, then once I have a guest on, I'll have that included. But this week we took a question from Josh about his career because he's looking to do a bit of a career change, and Sarah was just perfect to answer that question for him. But enjoy the rest of your weekend. Bank of England basically stays at 5.25%. Catch you soon.